Look at this resolution carefully. This is not a rant against credit cards. On the contrary, credit cards are extremely useful tools to carry in your pocket. Obviously, it enables you to be cashless, which in these times of demonetization is politically correct too. Then it gives you time to pay, sometimes even up to 55 days, interest free. But there is an evil side to this that you must guard against, and that is making late payments and availing of their revolving credit facility. Revolving credit involves making part payment and carrying forward the balance liability. The credit card companies encourage you to make the part payment by showing the minimum amount due besides the total payment, total bill amount. The carry forward liability attracts interest payment, and this is the most expensive liability you may encounter. So let me narrate to you a couple of personal stories which will hopefully bring out both these points. First, the positive side. 6 years back, I had to undergo a surgery and was hospitalized for 2 days. The bill came to around ₹1,00,000. I paid the entire bill using my credit card and then submitted the claim to my insurance company. The claim payment came even before my credit card bill became due, so I didn't have to pay anything from my own pocket. If you have a big ticket purchase like a TV or a fridge, you can buy it with a credit card. If you time it properly at the beginning of your billing cycle, then you can get credit up to 55 days. If you have this money ready, you can invest it in a fixed deposit or a liquid fund and earn interest from that. Now the evil side of the credit cards. Do not ever use the revolving credit facility offered by the credit card company. I have been using credit cards for the last 23 years and not once have I availed of this facility. This is because of the interest that they levy, which is really killing. But recently it so happened that for a bill of a due date of 20th, I deposited the check for the bill amount in their drop box on 17th. 20th was a Sunday, and they later told me that they require 3 working days to process payments. So I should have deposited the amount on the 15th. My payment was construed as late payment, and instead of calculating 3 working days, so which from 17th including the weekends would have come to 21st or 22nd, they counted the date of payment as 30th and charged me interest for 10 days. The amount due on the bill was 16,201. Interest charge for 10 days was rupees 2070. Service tax on it 310. Total extra payment 2380. They additionally also took from me a late payment fee of rupees 600 plus service tax. This was for the late payment. But if you pay on time but avail of the minimum amount due facility, which incidentally is only 5% of the total bill, then you are paying interest on the remaining 95%. And this interest is nowhere near the interest on your housing loan or your car loan. The charges vary anything between 27% to 42% compounded monthly. The compounding factor ensures that you are paying interest which quickly balloons to equaling the amount originally due. If you are one of those who will go and buy what you need and only what you need, credit card is a great tool. Those of you who are compulsive buyers and cannot control your spending, you are better off with debit cards. This is the 8th and the last of the financial resolutions an individual can make. Do go through all of them whenever you can. If you follow them, I promise you that you will save yourself from all the common mistakes an investor makes and lose money. Happy New Year and wishing you a lasting financial freedom. Thank you for watching.